Welcome back to Intables, everyone. Again, going over exactly what confirmation we're going to be looking for intraday and from our swing trade perspective. Where exactly may we be headed next as we rejected our 50-day moving average yesterday. We are leading to CPI on Thursday. Again, that is our next inflation report. Again, closing here on the upper end of our candle here, now retesting our 50-day moving average here as we have our increase in buy pressure here on the MACD. Where exactly may we be headed next? I'm going to go over exactly what we're looking for here. Hit the like button if you enjoy. Subscribe if you're new to the channel. If you are a day trader, if you're looking for very volatile breakouts, any breakout, any news that needs to be mentioned 2.5 hours before market open, we mentioned in the Instables room. Go to instables.com in the description below. And only for $15 a month, you will never miss a breakout alert today again. Let's jump into this one. So jumping into the daily chart with you guys here on the SPY, again, recapping on everything that we have been going over for the last couple of months. Again, we have been overall sitting on that anticipation of a possible Fed pivot after Nick Timiraos mentioned that possible Fed pivot. Again, we got our decrease in rates. However, Powell mentioning that increases in employment weren't exactly as high as we were looking for. So again, we had this pullback dropping below our 50-day moving average and then sitting within this consolidation, mentioning again over the weekend that we would possibly gap up into our prior gap down. That's exactly what happened intraday, again, gapping up into our prior gap down. However, mentioning that swings must be careful because again, we need that proof of concept here as we are respecting our 20-day moving average. And again, leading into CPI on Thursday, we're very much setting up for that possible major move down or possible major move higher if our 20-day crosses back over a 50 and we get that possible respect above our 20. Again, if we do continue to get that respect on the upper end of our 20, what we are keeping an eye on here is the upper end of our channel that we have been getting multiple rejections on. As you guys can see recently, again, leading into our Fed rate hike, again, we did get that rejection. Again, not exactly having employment as high as we did need, Powell mentioned, and multiple times prior getting that rejection on the upper end of our channel. So what we are looking for here is that proof of concept on the upper end of our channel. Again, that proof of concept would look something like a spike above the upper end of our channel, having a retest on a pullback, and then possibly getting that engulfing candle. So again, at this point in time, some may think, oh, we're very bullish at this point in time. Surely we do have some spikes coming. However, as you guys can see, we have not got our proof of concept on the upper end of our channel. So we're looking for, if we will continue to respect our 20-day first to show that we are crossing back over a 50, looking to see if we can spike above and continue to respect our 20, and then looking to see if we do get that proof of concept on the up end of our channel here to get that continuation. Again, having this increase in buy pressure and having our EMA lines crossing here is very good, but however, we do have to keep in mind that our EMA lines are still below the median of our MACD, giving us that possible chance of a continuation on lower. And again, rightfully so, as we do not have much room to run to the upside till we do retest a resistance. So again, just keeping that in mind, even if we do continue here, that we do have resistance coming up. So again, in my opinion, we're looking for that proof of concept to have that better continuation as far as swings go. Now, as far as intraday leading into tomorrow, where exactly we could be headed next, in my opinion, again, leading into CPI on Thursday, whatever move we have going into tomorrow, it very much will predicate exactly what CPI may come out as. Again, if CPI comes out higher than our prior CPIs, again, our past 3 CPIs have been continuing on lower. If we get an increase in CPI, that could show that we have more possible time till we reach that target, again, at 2% that we are looking for. Again, the Fed's looking for that 2% target. And then our largest indicator that we have been keeping an eye on here is the DXY. As you guys can see, again, rejecting our 50, again, on Friday after non-farm payrolls coming out. And again, with our 20 below our 50, looking for that continuation on lower, possibly, again, to get strength in the market. And the dollar, sure enough, giving us that continuation on weakness. So on the dollar, what we're looking for here is to see if our EMA lines do cross below here. Again, our 12 and our 26 crossing below here will give us that possible spike in the market. And we will be looking for that proof of concept if we do, again, cross lower there. Again, that proof of concept will be very key. We need that increase in pressure to continue here. We do not want to see any white shaded lines. Again, if we get a possible quick white shaded line after CPI and we continue with that white shaded line on digesting CPI after the next few days, then that could be that possible major continuation and sell-off continuation on lower if our 12 crosses back under our 26. So again, keeping that in mind, data is going to be very dependent, as Feds did mention yesterday, multiple times mentioning that, again, inflation reports continuing on lower is key, but we also do want to see that increase in unemployment that, again, we did get that pullback from, and we have been sitting on that consolidation from. So again, we're looking for what exactly CPI may come out as, and if we will possibly continue on higher. And something to keep in mind here on the RSI is that we still, again, we have been talking about this, how we still did not jump into overbought territory. So again, we still technically have an argument for why we could possibly jump in overbought territory. So again, if we happen to jump in overbought territory, maybe that could be that possible inverted head and shoulder that we've been mentioning. Again, we do have that possible inverted head and shoulder. We will see if we do get confirmation on this inverted head and shoulder above the upper end of our channel here, which again, in my opinion, our next resistance, if we did get confirmation on the inverted head and shoulder, would be here at 428. Again, our prior rejection on the upper end of our channel. So again, that is our bullish case scenario. But again, bearish case is that we do get that possible major rejection here, a possible engulfing candle going into tomorrow, since we did close on the upper end of our candle here. So again, showing us that we could possibly follow through with an engulfing candle, and that could be that possible continuation on lower if and only if we jump into our second deviation of our Bollinger Bands, showing us that decompression to the downside. So again, we are quite a ways away from our second deviation here. However, again, we will be looking for that possible decompression to the downside if CPI comes out higher than expected. But again, with our decreases in mortgage rates and our decreases in gas prices, we very much are expecting a continuation on lower in CPI. And again, that could be that retest on the upper end of our channel. We will see exactly what happens if we get that proof of concept, or if we do continue on with the rejection here on our 50-day moving average that we got. So again, just keeping an eye on CPI on Thursday will be very key. Going into tomorrow, we will have anticipation leading into CPI the very next day. So again, just keeping that in mind, even if we do have a spike, maybe we have an overreaction one way or the other, that we could very much have some type of bounce leading into CPI the very next day on that anticipation. So again, just keeping that in mind, very much expecting an indecisive move going into tomorrow. Maybe we do possibly continue on higher, and then we do possibly look for that anticipation on a decrease in CPI that very much is expected. Then there is no surprise that we do spike higher. However, again, just keeping in mind, CPI can totally ruin all of this momentum, since we are overall, again, sitting on anticipation of that possible Fed pivot. So again, just keeping that in mind, we could lose all of this anticipation, and then our next target lower here will be on the lower end of our channel. So again, just keeping that in mind, keeping an eye on CPI on Thursday. Now, again, if you guys are day traders, if you're looking for very volatile breakouts, we mentioned any pre-market news that is worth looking at in the Instable Zoom 2.5 hours before market open every single trading day. Go to instables.com in the description below. And only for $15 a month, again, you guys will never miss a breakout like today. Again, all of you Instables, I appreciate you guys. We're going to continue to go at it. Stay patient. Again, nice plays today. Very nice, simple plays today, in my opinion, that we're out the gate and from pre-market into open. Just continuing to watch levels, watch exactly how these movers are moving with or against the market. Continuing to be very key is exactly what we continue to focus on in the Instables room. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.